All right. Hello, everyone. My name is Mark Hodge. I'm head coach at Rockwell Trading, and we are going to do things a little different today with our Coffee with Mark. I have a great session for you. We'll look at the markets. We'll cover a few things that I think will really help many of you take that step from maybe dabbling in the markets to being a successful trader. And we'll also look at some trades as well. So let's go ahead and get started
This
here.
show is about real money and real trades. I'll show you the trading strategies that I personally trade, the tools that I use to trade my own accounts, and we will talk about the right mindset of a trader. Now, talking about mindset, I'm going to show you how to create SRC profits. And SRC stands for systematic, repeatable, and consistent, because that is the key to long-term success in the markets. So, if you are sick of all the hype and empty promises, and you want to learn trading strategies that actually work, then click on like right now and let's get started.
There we go. And I see, hey, Steven from Vacaville, just down the road. Good afternoon. All right. Well, I want to cover a few things. I think that with all of this market volatility and craziness that we're seeing, we definitely want to look at the markets. But I think there are a few tips that we could take a look at today that are really going to help traders navigate things and be more successful. So in today's episode of Coffee with Mark, we're going to take a look at the markets, of course, and I'm going to cover 3 habits of traders that lose. Sometimes you can learn more from what you shouldn't do, right? And then we will cover 3 habits of traders that win. And I will also cover 3 tips to be a better trader in 2022. There are 3 things that I think everybody should be doing. One, I do anyway, but the other 2, I think with the market environment that we have right now, they're good rules of thumb that should help you be a better trader in 2022. And then we're going to tackle some questions. So it's going to be a fun episode. I'm filling in for Marcus and really looking forward to the session. So let's go ahead and let's get started. And to begin with, I'm just going to slide over my charts here. And let's first take a look at, let's actually go to the S&P here. And we see what a wild January, right? So right here, this was the first trading day. It feels like an eternity ago, but this was the first trading day of 2022 where the S&P finished at 4796.57, just shy of 4800. Now it's trading above 4,300, and we've had a sell-off and some wild swings, right? Now, if we measure the last record close here, I believe it was on this day, the 3rd, and we look at the fall, we're down about 12% from highs. We're at about a 9-10% drop, so we're getting into correction territory in the S&P, and that's some news to be aware of. But I hear some traders saying, hey, what should we do with this crash? And in my opinion, this is not a crash, right? This is a market that has fallen. We've come off these highs here at the beginning of January. We've pulling back. Now we're looking at correction territory. A bear market puts us 20% or lower below the recent highs here. And so this is a pullback. And this actually, I believe, is very healthy for the market. You could, look at technical reasons for the pullback. Is it because of Omicron? Is it because of geopolitical issues? Is it because of the Fed? Is it because of earnings? There's all sorts of reasons to explain why this drop has happened. And in my opinion, a lot of it is anticipating rate hikes that we'll see in March. But you see here, big picture, these pullbacks are okay. I mean, even this huge pandemic slide, this monster slide that happened just over a couple of weeks back in 2020, this looks kind of minor based on the rally that we've had since these lows. So I think this type of pullback is healthy. Sure, it can be a little bit uncomfortable, but I also know there's a lot of new money in the market, right? A lot of new traders got excited rather than fearful about the pandemic drop when they saw that there were some names 50% below what they were trading at the beginning of 2020, and some new money came into the market that really hasn't experienced a pullback, let alone a bear market, right? So I think that this is healthy. It will be interesting to see where things go from here. I expect, volatility to continue tomorrow, and I do think that traders are going to begin to shift their focus and attention more towards earnings, and that is a little bit of a wild card because last year we had stellar earnings. Everything looked great. Now we're seeing a little bit of a mixed bag. Earnings, if you take it into perspective, they're good, they're decent, but we're looking at forward guidance, right? What to expect for the year? Will supply chain issues be a concern? Will revenue, continue with these companies and growth stocks? And that's where I think the attention now shifts to earnings, because after yesterday's Fed statement, the Fed is committed to raising rates. That's been expected. The market, you could say, is priced in 5 rate hikes. Right now, it sounds like the Fed is looking at 4. So 4 to 5 is the expectation. And then if we get fewer rate hikes, that could be a positive. If we have more, that would be a little bit of a shock. But the market's already digested this information, in my opinion. But there's still some volatility that we see. So S&P down 0.5%. with about 22 minutes to go before the close. Dow really dropped, but has come off of session lows. If we look at a 5-minute chart, we see that after opening higher and chopping around for the morning, there was a lunchtime sell-off, chopped around near session lows, but off of session lows and positive for the day. The NASDAQ having another tough day, similar movement here, but if we go to a daily chart, we can see that the NASDAQ trading near session lows, down another 1.4%. And if we look at where the NASDAQ was, the NASDAQ highs goes back to November. So if we take the close there, we see that the NASDAQ has been down more than 18%, but right now down about 17% off of the last record close high. So NASDAQ taking a bit of a hit here today. And this is where, in these moments, I think it makes sense to be cautious, but also to realize that there is opportunity. But being picky, trading with discipline, having a plan, following a plan, these are things that are going to help you. Now, I want to take a look at my open trades. Then we'll cover these tips, the 3, 3, and 3. And then we'll tackle some questions. So I know that there are a bunch of questions popping up. I like to go through the charts and tackle some content and then get to the questions. So I'm not purposely ignoring anybody, but I think that that's a great format. And the first trade I want to look at here is actually ADI. ADI is a trade that I put on last week. I was assigned at 162.50. If we look at this one, I like the way that this one moves, and I was able to collect decent premium on the put side, also on the call side. I own shares at 162.50. I like the support earlier up here when I put the trade on. It has pulled back through that support level, but we see that it has a good tendency to stay in these ranges and stair step higher. Even on this pullback, I think even if we get to these lower levels, it's going to be a stock that we could manage. And for me, this one made a lot of sense to trade, and I'm in at 162.50 this week, all over the place, but I own shares at 162.50. Marcus took this trade as well, and we're looking to manage it. It's a wheel trade. Our break even is much lower than that, and I have calls that are expiring tomorrow, and I will look to sell calls again next week. So that's one trade that I put on last week. Another one that I put on was CLF. This one taking a little bit more of a hit. I do like the metals or the miners. Actually steel in this case, so no confusion there. So U.S. Steel had earnings coming out. I've traded U.S. Steel in 2021 and did very well. These type of stocks have a tendency to really trade in these ranges. They might pull back and get through some support levels, but I've done very well with them. That's why I picked CLF, because I wanted U.S. Steel to have earnings and to get through that. U.S. Steel has, or CLF, I think, has earnings in 2 weeks, so a little more time before earnings. That's why I took it. This one, we collected some decent premium. I'm an owner at 20. Marcus is an owner at 20 as well. And we weren't able to sell calls this week, but we'll keep an eye on it, and hopefully we can do that next week. Another trade that was last week, and I was assigned, was JP Morgan. JP Morgan, a lot of financials were really looking good for the wheel, in my opinion, and you really had an opportunity to take your pick, right? So if you, with the financials, there was Citigroup, there was Bank of America, there was Wells Fargo, there was JP Morgan, there was Goldman Sachs, and I liked JP Morgan, so I bought shares at 149. I'm assigned at 149, that is, because I started by selling puts. Collected nice premium on the put side. It's pulled back a little bit, but I was able to sell calls to get some nice premium. My break even is well below 149. Stock's down a little bit, but I like this one. In theory, the financials and banks should benefit from a higher interest rate environment, and we see that there has been some strong support in 2021. I think that this is a great stock, in my opinion, to own, and also if it does pull back more, if this slide is a little more exaggerated than I expect, for me, I'm comfortable owning it, managing it, letting it work out. If I'm in a trade for a week, great. If it takes 4 weeks, great. If I'm in it longer than that, I'm okay with a good quality stock like JP Morgan trading the wheel. So this was another one. And then two more to look at. LVS. This is one that, in my opinion, is a textbook example of how to manage a rescue mission. And I know that Marcus has done videos on rescue missions, what to do, how to, the perspective to have, where we're not just, selling aggressively and creating this monster position, but strategically looking at pullbacks and doing a little dollar cost averaging to try and get a better price. And we originally were assigned back here at $58. We sold calls a couple of times, and then it started to sell off. So we collected some nice premium there. Now, with the sell-off, we were looking at some rescues. I believe it was $39 and then also $35 in that range. I did two partial rescues there. My cost basis on this trade, I own shares at $47.50. So I've been in this trade for a while, but I've also collected a lot of premium, and that means my break even is right around $44. I meant to make sure I had that information up to date for this session, and I'm ballparking it right now. But it's about $44, and you see that, okay, LVS is trading at $42.27. I was able to sell the 48 call this week and buy it back at 90% of its max profit. But we're not that far away, just a day away from break even. And if this does see a little more of a rally after establishing this range, if it breaks to the upside, that 47.50 and higher is looking pretty good. So not too bad, considering we started the trade at 58 and we've just been patient. We've followed our plan and really tackled this with discipline, selling puts at lower levels once we see support, not in a free fall. And it's been longer than I expected, but I think that there's an opportunity here with LVS. And after the gap on news that there are 6 operators, casino operators, that will be allowed to be in Macau, LVS being one of them, you had this nice jump here, establishing this range and down a little bit today after earnings, although there really weren't any surprises, in my opinion, with earnings. And then last but not least, our favorite stock, Ride. Woohoo! Ride is trading at 247. This is one where at this point, there's two angles on this. One, do Do you want to be buying a ride right now? And do you believe that compared to other opportunities, ride is a good trade? And the other is, if you own ride, should you be closing it out or should you be holding it? And I feel totally comfortable saying that as a new position, I would be passing on ride for obvious reasons to some. But for me, really, if I'm looking at opportunities in this market, I think there are better trades out there, right? So anybody looking for new trades, I don't think there's any reason to mess around with this. Now, being in a position in ride, my position, I got out of half of this position on this rally here. So I actually was back here. I think I closed half of my position around 11.50, $12. So I have a much smaller position, and my break even is actually lower here. But I wouldn't put new money into this one. As far as being in it here, do I think that that ride could go back up to 25? Probably not, right? Do I think that it could go up to $5, $7.50, $10 before it goes to zero? I think there's more upside potential here. It doesn't mean I'd put new money into the trade, but this is why I'm holding it, right? I've reduced my exposure. I got in, I closed half of my position. That was what I decided to do with the trade. And now at this point, with the position I still have open, I'm seeing how this one goes. It's interesting because we've had more news about ride recently. The market really hasn't reacted. But I really don't think there's anything that's going to happen for another, 5-6 months. So this is a longer term trade at this point. And then we'll just have to see what Foxconn does and what Ride does. And I think that towards the second half of the year is where we'll have a better perspective on this one. And if it does have something that, some news that kicks it in the butt and gets it going in the direction that we want. So those are my open positions right now. And I'm comfortable with every position that I am in right now. Looking at the markets, S&P down a little bit, Dow up a little bit, NASDAQ down about 1%. And right now, that's where things stand with me and my trading. So I want to tackle the topic that I brought up: 3 habits of traders that lose, 3 habits of traders that win, and 3 tips to be a better trader in 2022. And I want to make sure to tackle some of these questions. So let's go ahead and let's bring up, I put together a couple of slides here. First off, for anybody who's been watching Marcus, every now and then I'll come on and I'll do a Coffee with Mark. I do the stock market update in the morning with Marcus Monday through Friday, so you might recognize me there. But if you haven't participated in or joined one of the sessions that I've done, what the heck do I know? Just a little background here. I have been in the had an interest in investments going back to 1996. In 1996, I was a broker assistant at Dean Witter Reynolds. If you ever saw The Pursuit of Happiness, that wasn't the location. I wasn't at the San Francisco location. I was in Sacramento. But Dean Witter Reynolds, huge brokerage back in the day. It became Morgan Stanley Dean Witter, and then eventually the Dean Witter part got dropped. But that's when I got started. I had a fascination with the markets. I wanted to learn as much as possible, and at the time I thought that being a broker would be the way to do that. Fast forward a little bit, and in the late 90s, I started trading stocks in the .gone era, right? I also became a licensed financial advisor with American Express. So that was my early journey about, I believed it was going to be more about learning how to trade. And I realized that was something that I really needed to learn on my own. Yes, I became licensed and I took the Series 7 and did all these tests, but that didn't really teach me how to trade. So I became a student of the markets myself, became very passionate about trading, read every book that I could read. At the time, you were buying courses, and now there's so much information at your fingertips. It's hard to figure out what makes sense and what doesn't, and what's good information and what's not. But at the time, I was just digesting everything, and I was turned on to options in the early 2000s and did very well, and that became my real interest in the markets. Now, I had an interest in day trading futures, and that led me to Marcus. And I reached out to Marcus about coaching me on how to trade futures because it took me years to figure out what to do with stocks and options. And I felt at that point I was a sophisticated trader. I understood the markets. Sure, there's always things to learn, but I was doing very well with options. I reached out to Marcus and twisted his arm, got him to coach me on futures and day trading futures. So I did that for a while. Now, in 2006, Marcus asked me to join Rockwell Trading. He had a bit of a vision here with Rockwell and what we could potentially do. So I have coaching experience going back to 2006. So about 25 years investment experience, 15 years coaching experience. And I think that puts me in a unique situation to not only have my own trading experience to share, but also from a coaching side, what I experience with traders. And just like I believe there are repeating patterns in the market that we could take advantage of, I also see that there are repeating patterns with traders, right? There tends to be this trading psychology that just it's superimposed on traders when they get the trading bug. And I think that we could learn a lot from not only our own behavior and what we do, our successes and challenges, but also the experience when it's multiplied by multiple traders who are taking their trading seriously. And so having conversations with very successful traders in our coaching program, the traders that were able to make 100% plus and really sizable returns on their investment, reaching their goals for the year, and also new people in the program who have had some challenges pre-mastermind where they're in some trades. There are some very similar habits with traders who really need help, and then also traders who are doing well. And I want to share those right now. So this here... I traded the dot-gone era, the housing crisis, the flash crash, the taper tantrum, the pandemic, and now the tech rotation. So that's my experience, and let's go ahead and get to these habits. And let's start with 3 habits of traders that lose. And I think that the first one is simply being impatient, right? You could take 3 positions in the market. You could be long, short, and you could be flat. You could be in cash. You could be out of the market. And sometimes that is the most challenging thing to do. There were periods when the wheel was doing very well last year and things got to be a little slow, like at the beginning of December, and traders wanted to force things, right? And this is where, with my experience, it doesn't make sense to force things. The market conditions will present themselves, ideal market conditions, that is, if you wait, if you are patient. And so I don't need to force trades. And this is where, by being impatient, many times traders are taking poor trades when there just aren't many opportunities, thinking, you know what, it's just going to be a week, and then it turns into 3 months, right? Also lowering your standards. I don't want to say anything that isn't PC, but you know what happens when you lower your standards, right? You usually, that leads to regret. We don't need to have that. Don't lower your standards. Stay focused on those quality trades. They will come. They will come. And sometimes that's hard when things are slow. And just, be patient. Also, aggressively trying to fix a trade. One thing that I really see with traders is that they get into a trade with a certain set of rules, but then after the trade is down, they change up their rules, right? With the 2 strategies that we focus on here at Rockwell, we have the Power X strategy, we have the Wheel strategy that are two primary trading strategies. So I've had some traders who they take a Power X trade and then they don't get out with the stop loss, right? And the strategies are totally different. They're 2 completely different methodologies with different sets of rules and also different reasons for getting into the trade. And one of the things about the Power X trade is that you have fixed defined risk on the trade. So it doesn't make sense to, try to fix it by removing your stop loss and then say, you know what, I started with a power X trade, I'm going to be super smart, now sell calls on it, turn it into a wheel, and then the stock's falling when you should have gotten out, and now you're taking on more risk. And there are all of these reasons to get out of the trade, because with the rules that you had when you put the trade on, you should be out, but then you're trying to fix it, right? And this is also where, if you've watched Marcus likes to do a rescue mission, we're really giving the trade room to breathe and even pull back. And I know that when that money's sitting there, it could be a little bit difficult to just know that that position isn't making money. And with selling calls and selling puts, we're collecting premium. So it could just be sitting there. So I see traders that they say, instead of waiting for a 30% drop, let me sell puts with a 10% drop. And if it continues to fall, you could see that snowball turn into a bigger problem. And I think that it's better to really, sit on your hands, let the trade do its thing. And that could be one of the most challenging things. So being impatient is a habit of traders that I see who are struggling and losing. Another habit here that's going to work against you is lack of discipline. This could be breaking rules, the Uber trade, and searching for the Holy Grail. Breaking rules should be obvious, right? Breaking rules on an entry, breaking rules on an exit, right? Taking small profits because you're relieved, like, oh gosh, I was able to make a little money, let me just get out, but then letting some losses mount up. Now, I think the wheel in particular, these numbers to me are very revealing, because for me in 2021, I was assigned on 16% of the wheel trades I took. This means that 86% of the time, the puts expired worthless, right? And when they expire worthless, that means that we're making money, right? So it's easy to get in that mindset. We're making money. And then the assignment takes place. And if you get assigned, that put that you sold is actually going to be losing money at the time. However, I found that on those 16% assignments, that's where about 55-60% of my profits came. And on an average, I was holding a trade for 4 weeks, right? So there might be this temptation to overmanage the trade, break the rules to take a small profit, but then you miss out on the big, nice profits. And knowing that I could be in a trade typically 4 weeks, I have to give the trade some room to do its thing. The Uber trade, that's where you get these hot picks, right? Where you're in a Uber car and someone says, you know what? The next big thing is going to be Stitch Fix, right? and knock that off, right? Searching for the Holy Grail too. There's a difference between learning and there's a difference between over trading, right? And so if you're learning new ideas and analyzing your plan and making a decision if these new plan or new ideas have a place in your plan, that's one thing. But a lot of traders, they'll start with one idea and they'll say, okay, this is great, I love it. They start trading it, and then they don't like the performance. Things get slow. They trade another strategy. They're excited. It doesn't work as they expect. They trade another strategy. They're just going from strategy to strategy to strategy. Take something simple and master it. Like, really commit yourself to learning the strategy and picking it apart to see if there's ways that you can improve it, rather than just going from one to the next and searching for that Holy Grail, because you're going to spend a lot of time just spinning your wheels and not making progress. So another habit of traders that lose is not being accountable. Like Smokey says, only you can prevent forest fires. You are accountable for your trading decisions. And even if you are trading an idea or a strategy that you learned, borrow from it, right? Borrow from it and own it. Own your trading decisions. And this is going to help with your confidence. It's also, by taking ownership of the strategy, it's going to help you find ways to improve it and make adjustments based on your risk tolerance and your experience, which is so important. It's easy to just say, oh, I got into this trade because such and such recommended it. But then you have, and this is something that I see when I'm working with people who have been stuck. It's easy to see, like, okay, so they might say, well, what should I do with this position? And I'm more than willing to offer my opinion on what I would do, right? But then when we start picking it apart, and we find out that it was a trade that was just recommended by a dentist, and there were no entry rules or exit rules, and then the stock's down 50%. You be accountable so you know what to do. Take ownership of every single trade, and if you can't do that, then trade on a simulator to start out, right? Okay, switching over to the three habits that win, and one is intentional experiences, right? Do you trade the markets or do the markets trade you? You want to be trading the markets, right? When you are focused and you are focused on having an intentional experience in the market, there's really two parts here. One's practice before you're trading live, and then the other is live trading where you're risking your money, right? The first being practice. I see with the traders that I work with, traders that are committed to learning and practicing to understand and to trade a strategy successfully. They do best. They practice an idea. Their intention to learn and everything they do is intentional. Rather than markets just opening up and you just like blindly saying, "Oh, S&P's down. Let me sell. Let me short the S&P. Let's see what happens." Right? Have a process. Know exactly what you're going to do. Starting with practice, where everything you do is intentional, based on simple rules. But then when you are trading live, executing the trade, having a plan, knowing your plan before you even risk money on the market. That's a trait of traders that win. And then another one is really always be learning. But learning is not just learning a new strategy, but improving through testing, right? Looking back at the trades that you've placed, what can you gather from that? We talked a little bit about that when I did a Coffee with Mark in December as we approached the 2022 year. Review your trades. What have you learned from the trades that you put on, right? Do you do better with a certain type of trade? Maybe a certain stock, a price, a strategy? Are there filters you could apply? Know what worked and what didn't. Be critical, but don't criticize, right? Be critical. What could you do better? How could you improve? Always be learning, and that's going to be key. Another habit of traders that win is having a routine. And this is something that I see with traders that do well. There's an approach. They have a routine. They go into the market with discipline. My routine, I'm just sharing it for you to reference. I live on the West Coast in Northern California. I wake up at 5 a.m. and I'm in my office at 5:20. And at 5:20 a.m., I'm researching news, primarily for the stock market update video that Marcus and I do. So I'm looking at different newsletters. I also do a little of that the day before. But I have this routine where I'm up at 5, I get up, I'm not hitting snooze. At 5:20, I'm researching, I'm looking where the market's going to open up. This is where at 6 a.m. I do the stock market update with Marcus for everybody to view. At 6:15 a.m., I'm reviewing my open trades and I'm looking for new PowerX trades. So with the PowerX strategy, I'm looking to see if there are new opportunities because all of the analysis can be done outside of the markets. And then I'm also looking at my open trades, right? If I'm in wheel trades, is the stock up in pre-market? Can I sell calls? And I can kind of see and gauge what stocks I should focus on based on that 6:15 review. That's also when I start a mastermind call on most days as well. 6:30 markets open. I'm looking for wheel trades and managing open trades. And I'm keeping an eye on the markets for about an hour. Sometimes it goes to about 7:40, and 7:40 to 8 a.m. I take a break. And at 8 a.m. I'm logging trades and journaling. I'm logging my trades, the trades that I took, my entries, any closed trades, I'm logging that. And I'm also making notes on the day, maybe observations. This is a key part to it because I think that a lot of traders, they just go through their day and then the markets like dull their senses, right? Where they really can't pick apart one day from the next. But by logging your trades, keeping track of things, and then keeping a journal, how did you feel about the day? Were there any observations? What about trading ideas? I have a journal with all sorts of trading ideas. Most I haven't tested, and some that I've tested, or many that I've tested, end up not being that great. But I always like to note, like, if I have an observation, something that I feel I should explore more to help with my trading, to help with my strategies. And that's what takes place at 8. So that's just my morning routine. But I do believe that the traders who are successful and the ones that I see doing well, they're normally not the ones that sometimes they wake up at before the markets open and trade the morning. Sometimes they take a stab at the afternoon. Sometimes they might take a look at what's going on midday during lunch. Have a routine. Have a routine. All right. So those are the 3 habits of traders that win. And here are 3 things that I think will help you be a better trader in 2022. This is one thing that Marcus really mentioned, and we learn from this, right? We learn from our experiences in the pandemic, and in 2021, growth stocks were hot, right? And I know some people are still in some growth stocks and in positions. Now it's time to manage those and to make decisions. Do you fly a rescue and see, are we seeing support? Does it make sense to now commit a little more money to these trades? But in this year, I believe that focusing on value over growth, that's going to be a common theme. And you might get lulled into some opportunity where growth stocks take off a little bit because of just them getting hammered, right? And there might be a little bounce, but I do think that the theme for the year, if you're focusing more on value than growth, this will help you be a better trader. And then also avoid being in positions that are too correlated. This is something that I saw a lot last year where traders, let's say that you're excited about the EV market. So you buy Lucid. And then you think, well, what about Rivian? Let me buy some Rivian. And then you're thinking, well, NIO, they're going to introduce cars and really start to produce in the U.S. market. So let's get into NIO. Hey, Ride's beaten up. It's trading low. Let's buy some Ride. Don't do that. Don't put all of your eggs in one basket. If you look at the trades that I put on, that I have on right now, ADI, JP Morgan, LVS. I think I mentioned that I'm also in GDXJ. I sold puts at 36.50. I might have forgotten to bring that one up. But so gold miners, a bank, the casino industry, like it's diversified, right? And yes, if the markets are falling, it could be that overall they're pulling back. But by having some diversification and not being all in EV or all in growth or all in tech or all in banks, I think that this is really going to help you be a better trader in 2022. And then last but not least, your big theme here, have a plan. Have a plan, know what you're going to do when you put a trade on, and also how you're going to approach things, and know how you will manage it once you're in the trade. So I'm going to do this. I'm going to bring up the charts one more time and let that show just so we could see. Dow turned negative, but really just flat for the day. What time is it? Markets are closed. So Dow down 7 for the day. S&P 500 down 0.5%, and NASDAQ down 1.4%. So interesting day, interesting follow through from yesterday after the Fed statement. All right, so I see that there are a few questions, and I'd be happy to tackle a few of these here. And that's. You know what? One thing I said I would do in my plan for the new year is make sure I knew how to share questions here. And in the setup that I'm using, I have not learned how to do that. So bear with me. But David says, I agree that journaling and keeping the logbook up to date and accurate are things I need to work on. Probably others too. Absolutely. There's all sorts of evidence that shows that journaling really helps in all fields of life, right? And I know that it kind of feels weird and sometimes it seems tedious, and but in my experience, like keeping an accurate trading log, not just your broker statement, right? Because you really lose sight of what you did well and what you did wrong if you just look at the end of the month and, oh, I made $5,000, great. Or, oh, it's down 1,000. Okay, I'll do better next month. Or, hey, I made 25 grand. This is cool, right? There's so much more beyond just that number. It's easy to focus on that number, but by keeping a trading log and also keeping notes on, any ideas or how you approach the day, maybe you start to see correlations between days when you're not feeling good and your performance in the market, right? That would be important to know. That's not going to show up in your broker statement. All right, let's see. Okay, then there's a question. Am I correct in seeing that the PowerX optimizer can't find anything in this market? When I see the indicator lines reverse green at the bottom, it also has to do to the market. So for those that were looking at PowerX trades this morning, it said that there are no, based on our scanner results, there are no opportunities that meet our scanner criteria. This is for the PowerX side. And I do think that this is a good thing, right? I mentioned over trading and being impatient and being lulled into the market, right? And at times it can be tempting to just kind of give it a go. But if you were just giving it a go and buying on this pullback that took place, I would rather be trading the wheel for two reasons. One, when you're trading the wheel, you're really trying to focus on stocks that have good support, that really aren't in a free fall. So if the market's falling, but you're focusing on stocks that are really hanging in there, I think that's a huge plus. Two, you're collecting premium, which is super high. The premium is increasing when volatility is increasing. So that means you could either bring in more premium or sell strikes that are lower, and that's going to be a positive. So I think that there were opportunities in a market like this when the market is falling, but with PowerX, it said no opportunities, and that to me is a good thing. Yeah, I was going to look to see if there was anything on the list, but by the end of the day, there's nothing on the wheel side that I'd be interested in. Baidu, just craziness and pulling back. Yeah, there might be some support here, but right now I'm avoiding Chinese stocks, and this thing, you see that it's making lower lows, it's making lower highs, so this one's a no for me. Beyond Meats, let's see. Beyond Meat is in a free fall, so this is a no for me. Also, here we could click on the megaphone. We could just see what Beyond Meat's numbers look like, and we see that the net income is negative for each quarter. So this is definitely a growth stock. So if the chart didn't tell you no, and it's in a free fall here, I think that it being growth in this market environment would be a reason to stay away. End phase in a free fall. Just look at this, 280 down to 120. That's a no. GameStop, I just stayed away from this one. With this type of volatility, it's hard to figure out what a fair price is for this. And now it's really just selling off. So I'm not touching that. Royal Caribbean chart-wise actually looks the best. But with the wheel, this is where you have to decide, do you want to own Royal Caribbean? And Marcus and I, we share a similar view on this. And I believe, and it's interesting because this hasn't necessarily been the case. If we look at like UAL, airlines and the cruise lines have moved in a very similar way, right? Here's American Airlines. I just looked at UAL. And if we go back to RCL, I believe that the cruise lines potentially have more exposure to the downsides on an event. What I mean by that is if there is a new variant, right? it seems like we've learned to travel with the airlines, and we have a new normal. Whether or not you like a mask, you're wearing a mask on an airline, and so you have an expectation of what's needed to fly, right? And so I believe that even if there was a concern, the government's gonna help out airlines to help the transportation industry, right? Cruise lines, that's a luxury, and so I believe that there's greater potential for something to come out that could potentially have an impact on cruise lines, where they get hammered because they can't dock in ports because of COVID, right? I hope that's not the case, but for that reason, I think that if you are going to pick something between the airline and cruise lines, I think that the airlines are a little bit better. I'm staying away from cruise line. Either way, whether even if you don't want to trade airlines, that's totally understandable too. I'm not saying trade airlines, but if I see that their charts are very similar, the movements are very correlated, and if I had to pick between the two, I would prefer airlines over cruise lines. So at least at the end of the day, nothing at all on the wheel side for me to consider. But it has been a good week because of the volatility. Lots of opportunities popping up. All right. So there's a question. Why does the PowerX Analyzer have the option to run it for short selling, but Mark and Markus say not to use it? Are we waiting for a bear market for that? Great question. And so we have the ability to look at shorts because this is something that we've programmed, and we know that some traders like to take short positions, right? The reason why Marcus and I prefer longs only is based on our analysis and testing. We find that longs consistently outperform the market, right? And this is where we've analyzed during the pandemic when we had a huge drop in 2018, last quarter of 2018 when there was a drop. And we see that time and time again, longs outperform shorts. Now, if you were running for shorts today, there was Gush, PBF, PSCE. And so I could click on one of these to bring it up. And here's the chart. And here you see that, okay, if we look at the P&L graph, it's a little bit erratic, but we see that, the profit and losses are increasing, which is what you want to see. But this is for longs only. If I go to shorts only, now I'm seeing the profit and loss for just short signals. And we see here actually that the profit spiked in September of 2020. But if you were taking all of the short signals from 2020 to the current date, that you would have been losing money. The profit and loss graph is decreasing. So if you have a crystal ball and you can say, hey, this time it's going to be a winner, and I'm going to pass on this short signal. 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 I'm going to take this one. Then short signals work okay. But over time, the crystal ball is a little bit difficult to use. And we find that over time, shorts underperform. We could look at PSCE as another example. This is what the shorts look like. You had a P&L that you had a couple of wins real early in the 2 years that we look back, and then the P&L just went flat. If we look at the trading report, we could look and we see that, look at this. Loss, loss, loss. These are all shorts. Then a win, loss, loss, then a win, then a loss. So there just isn't enough data for us to get excited. Well, we have the data. There just isn't enough profitability on these signals for us to get excited. It makes sense based on our experience to not trade the shorts. And then even if you have a pullback like this, you might miss out on a drop, but then the opportunities that come after the drop to go long are actually better to take. So that's why we don't take it. All right. Okay. Well, yeah, I see Francois says, love keeping a log, keeps me focused. I absolutely agree. There is a little record keeping to your trading business, right? Treat it like a trading business, not a hobby. Okay. Hey, well, I know that we usually keep these to 45 minutes, and we've gone a little bit longer. I think there were some great questions to tackle. I hope that my review of what's going on in the markets, the positions I'm in right now, I hope that helped. And then also tackling some of these questions and looking at wheel candidates to consider, and also talking more about PowerX. I hope it helped you. As always, we are here to help, and please keep watching the videos. If you like them, give it a like, and I'll see everybody tomorrow morning in our stock market update.